Hello, fellows. Welcome back to WealthWise TV. From skyscrapers in Manhattan to ranches in Texas, real estate is woven into the American dream. It's where we live, work, build memories, and for millions, it's also the fastest path to wealth. But how does American real estate really work? Why is it so powerful and so risky? And how can you start building wealth through property, even if you don't have $1 million bank account? Today, we're breaking it all down. This is the real guide to American real estate. Let's dive in. Ask any millionaire where their first big money came from, and chances are they'll say real estate. Why? Because real estate is unique. It offers appreciation. Properties typically rise in value over time. Cash flow, rental income that pays you every month. Leverage, use borrowed money to control expensive assets. Tax advantages, depreciation, mortgage interest deductions, 1031 exchanges. Tangible security, it's something you can touch, improve, and control. It's no surprise that over 65% of U.S. household wealth is tied to real estate. The U.S. is one of the most robust and diverse real estate markets in the world. Here's a quick breakdown. Residential real estate, single-family homes, condos and townhomes, multifamily, duplexes, triplexes, fourplexes, commercial real estate, CRE, office buildings, retail centers, warehouses, industrial parks, land, undeveloped plots, farmland, timberland, or mineral rights. Each category plays by different rules, but the goal is the same. Owning real estate builds equity over time. Let's zoom in on the 5 pillars of wealth in real estate. 1. Appreciation. Homes tend to increase in value. Over the last 50 years, U.S. real estate has appreciated by an average of 4 to 6% annually. That means a $250,000 house could be worth over $400,000 in just 10 to 15 years, with no extra effort. 2. Leverage. With real estate, you can control a $300,000 asset with a $30,000 down payment. The rest, the bank covers it. That's leverage, and it multiplies your return on investment. 3. Cash flow. If you rent out your property, the rent can pay your mortgage, cover expenses, and still leave profit every month. 4. Tax benefits. Depreciation lets you deduct the cost of property over 27.5 years. Interest deductions reduce your taxable income. 1031 exchanges allow you to roll profits into new properties tax-free. 5. Equity growth. Every mortgage payment you make reduces your loan and builds your ownership stake in the property. Over time, that adds up to serious net worth. Of course, real estate isn't magic. There are real risks. Market downturns. Values can crash. Remember 2008? Vacancy. A rental without tenants bleeds money. Maintenance. Roofs leak. Furnaces break. Tenants damage. Liquidity is not like stocks. Selling a house can take months. Smart investors prepare for these risks with cash reserves, insurance, and deep research. You don't need to be rich to start in real estate. You just need a plan. Step 1. Build your credit. A strong credit score, typically 680 plus, gets you better mortgage rates, more loan options, and lower payments. Step 2. Save for a down payment. FHA loans allow you to buy with just 3.5% down. VA loans offer 0% down for veterans. First-time homebuyer grants exist in many states. Step 3. House hacking. Buy a duplex, live in one unit, rent out the other. The rent helps pay your mortgage, sometimes all of it. Step 4. Buy and hold. Purchase a rental property. Hold it for years. Let rent and appreciation do the heavy lifting. Step 5. REITs, real estate investment trusts. Don't want the hassle of owning property? REITs let you invest in real estate through the stock market, hands-free. Here are proven real estate strategies based on your level. Beginner, under $50,000 savings. House hacking, rent out a room or ADU. Partner with family/friends on small rentals. Invest in REITs. Intermediate, $50,000 to $200,000. Buy and hold single-family rentals. Duplexes, triplexes. Short-term rentals, Airbnb. BRRR strategy, buy, rehab, rent, refinance, repeat. Advance, $200,000 plus or strong equity. Commercial properties, apartment buildings, real estate syndications, development projects. Timing and location matter. Buy in growing cities with population and job growth. Look for value-add properties, places you can improve. Study rent-to-price ratios. Higher is better for cash flow. Watch interest rates. They affect affordability and demand. Tools like Zillow, Redfin, Rentometer, and BiggerPockets can help you analyze deals. The best real estate investors don't chase trends. They play the long game. Focus on cash flow over hype. Think in decades, not months. Protect your downside, insurance, inspections, reserves. Keep learning. Real estate is a game of knowledge and patience. Real estate doesn't reward the smartest. It rewards the most prepared. Real estate built empires like the Rockefellers and Trumps. It builds freedom for everyday Americans who buy one house and keep going. You don't need to be rich. You just need to start. Start with research. Start with saving. Start with one small deal. Over time, that first deal could change your entire financial future. One brick at a time, you can build your empire. Let us know in the comments. Are you already investing? Just starting out? Or stuck and need help? Hit that like button if you learned something today. Subscribe for more content on real estate, wealth, and smart living.